Good afternoon. My name is Mike Meharry. I am the managing editor of SchiffGold.com and SchiffGold News, which you can find at SchiffGold.com/news. And I wanted to talk a little bit today about the stimulus that we're seeing in response to the coronavirus lockdowns. Um, on Friday, President Trump said that he wanted more fiscal stimulus, which I found a little bit surprising. This was after we got the better than expected unemployment report, and Trump was making the rounds telling everybody that the economy was recovering quickly, that America was going to be great again any minute, and that was a huge sign that everything is going to be okay. We're going to get the V-shaped recovery, as everybody calls it. And I've been saying for weeks that we're not going to get a quick recovery. We're certainly going to get a bounce back as the economy opens back up, as states begin lifting restrictions. And we'll certainly see some bounce back. But I think ultimately, when the Federal Reserve has to start reckoning with unwinding all of the incredible monetary policy that it's been engaged in, at that point, we're really going to start to see the crash. And if they keep going with the money printing, well, then we're liable to have to deal with inflation and all of the negative impacts that come from that. But at any rate, Trump was out talking about the fact that we need more stimulus. And there have even been some calls for another round of stimulus checks. Another idea that I've seen floated is a payroll tax cut or a reduction in our payroll taxes. So we have all of this stimulus. This is on top of trillions of dollars of stimulus that has already been approved by Congress. We have, of course, the stimulus checks that went out to everybody. We've had the PPP program, all of these loans, bailouts for airlines, movie theaters, all kinds of money has been authorized by Congress on top of the spending that has been directly gauged toward coronavirus relief, creating materials and all of those types of things. So the federal government has spent trillions of dollars already. Trump is talking about spending even more. I haven't seen a number pinned to that, but let's say another 500 billion or maybe $1 trillion. And nobody seems to be talking about the big question. It's sidetrack just a second. It's interesting to me because I remember when Republicans were against stimulus. Remember 2008 and Obama was, doing these stimulus programs, and we had TARP and all of these bailouts, and Republicans threw a fit. They were absolutely against the stimulus. And we even had this Tea Party movement that developed in opposition to the taxing and the spending. And that has completely disappeared. Today, everybody is pretty much on board with the idea that we have to have more stimulus. It's necessary. If we don't do it, the economy is going to collapse. And nobody is asking the questions that were being asked back in 2008. And that's who is going to pay for this? Who is going to pay for all of this stimulus? Because despite what the monetary theorists will tell you, there are no rainbows with pots of gold at the end. There are no unicorns dropping money out of the sky. All of this has to be paid for, and it will be paid for at some point. There's no question about that. Somebody has to pay for it. There is no such thing as a free lunch. So who is going to pay for that? Well, the answer to that question is clearly us. You and I are going to pay for it. And honestly, our children and grandchildren and probably their grandchildren are going to be paying for it as well. But we will pay for it. We're either going to pay for it in higher taxes, or we're going to pay for it through an inflation tax. And truthfully, we're probably going to pay for it through both. A lot of people haven't even considered the idea of raising taxes. And, I think that's coming down the road. Certainly if Biden wins the election. And of course, that's up in the air at this point. But let's say Biden does win the presidency and the Democrats take control of the Senate. Well, I guarantee you that we're going to have tax increases in that scenario. And I would say that even if Trump wins over the next 4 years, we're probably going to see some type of tax increase. we've simply spent too much money over the last few weeks to just go on as it has always gone on. We're talking, probably by the end of this fiscal year, $27 trillion in national debt. You can't just pretend that that doesn't exist. So, of course, if Trump manages to maintain the presidency, if the Republicans can keep control of the Senate, then it will be more difficult politically to pass tax increases. We certainly, well, I won't say certainly, but we shouldn't see the level of tax increases that we will see if Biden wins. But if Biden wins, all, Katie bar the door, we're going to see big tax increases, probably down to the middle class level. Well, and we're going to have to soak the rich, of course, as if the rich aren't already paying an exorbitant amount of taxes. So, I think that's down the pipe. Taxation is down the pipe. But let's just pretend like we live in this perfect world where, we manage to avoid the tax increases. We still have to pay the bill, and we're going to pay it through the inflation tax. And I think that's going to be the greater tax than, even if the Democrats take control and we have tax increases. We are going to see a massive inflation tax over the next several years. Now, what do I mean by the inflation tax? Well, the Federal Reserve is monetizing a lot of this debt. It is buying treasury bonds. We have all of these quantitative easing programs. The Fed is basically, when you boil it all down, it creates money out of thin air. It uses that money to buy treasury bonds off of the open market and puts those bonds on its balance sheet and injects the cash into the economy. So it is creating much more cash. It is elevating the money supply. And that is the very definition of inflation. How that inflation will manifest remains to be seen. It's certainly being manifested right now in the stock market. We have a stock market right now that is basically at the level that it was before the pandemic. After all of the economic destruction, the stock market, the NASDAQ is actually higher. The S&P 500 is about equal with where it was before. That boggles my mind, especially when you realize that the stock market was overvalued before we even went into this. And I'm not going to get too deep into that. That's for another live stream. But all that said, we're seeing this inflation in the stock market already. But at some point, you have to think that we're going to see price inflation. Given the dynamics of what the Federal Reserve is doing, it's creating trillions of dollars, and it's not creating anything else. The Federal Reserve doesn't make products. The Fed isn't pumping out stuff, and it's not providing any kind of services. It's not doing anything, creating anything in the economy. It's not manufacturing real wealth. Real wealth is stuff. Real wealth is services. Real wealth is not a bunch of money printed out of thin air. That's all the Federal Reserve can do. When you boil it all down, all the Fed can really do is create inflation. And it's doing that in spades right now. We are seeing huge levels of inflation. That means we have more dollars chasing basically the same amount of stuff, or actually less stuff, because right now we're in a situation where we still have millions of people who aren't working. We have products that aren't being produced, services that aren't being rendered, and yet we're pumping all of this money into the system. We have more dollars chasing the same amount of stuff, or arguably even less stuff. That means that the value of that dollar is being diminished. Your spending power is being reduced. Those dollars that you had before all of this started are losing their value even as I speak. It's kind of like if you imagine dumping water into a bucket of bleach. It dilutes the bleach. The bleach becomes less impactful. The more dollars you pump into the system, the more diluted the system becomes, the less value your dollars have. That's the inflation tax in a nutshell. Your money is losing value, and as time goes on, your money has less and less value. It penalizes savers. It penalizes people that have or are holding dollars. And that's why Peter Schiff keeps saying over and over again, you need to not be in dollars. That's why he's recommending buying precious metals, gold and silver, because they will increase in value as there are more dollars in the system. Gold and silver, it will take more dollars to buy the gold and silver. So if you buy gold today, 5 years from now, almost certainly it will be worth more dollars simply because of the inflation tax that we're going to see. But for a lot of people, this inflation tax is going to wreck them financially. The if we do end up having the level of inflation that's possible, when we get to something in the realm of hyperinflation, then we're really going to feel the pain, because what it means is that everything that you go to the store to buy is going to cost you more money. So, enjoy that stimulus now while you can, because it's going to be buying less and less as time goes on. And I was talking to a friend the other day, and he was saying, he works in the food industry, and he was saying, he's already seeing the prices are going up for basic things like food, beverages, and so that does not bode well as we look forward and move ahead into the future. So beware of the inflation tax. Prepare yourself. Get out of dollars. Don't hold on to dollars right now. Hold on to commodities, gold and silver. If you're interested in learning how to buy gold, or just are interested in figuring out how gold and silver can help protect your portfolio, I highly recommend talking to a SchiffGold precious metal specialist. These guys are experts. They can look at your individual situation and see how precious metals can help you. You can just call 1-888-GOLD-160, or you can shoot them an email, info@schiffgold.com. One of those guys will get back to you. They're fantastic, and they can help you kind of sort through how to protect your wealth as we see this inflation tax rearing its ugly head, because it is on the horizon. So that's all I've got for today. I hope you have a great rest of the day. And make sure you tune in on Friday to the SchiffGold Friday Gold Wrap podcast that I host. You can find that over on YouTube. You can find it on Stitcher, Google Play, iTunes. You can also, I usually post it here on Facebook as well. So check out that podcast. I'll be talking more in depth about whatever's going on this week. We've got the Federal Reserve meeting that's going on right now, so I'm sure we'll have some Fed news to report on, and certainly other things that are going on out there in the world. You can keep up with all of that over at our website, schiffgold.com/news. I post there daily, just the news of the day. So check that out when you get a chance. And again, I hope you have a great rest of your day.